Hey, good morning, everybody. My name is Cliff Backus, and this is your PushButtonStockTrading.com Daily Video Market Review Weekend Edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, the NASDAQ and the S&P 500 both rose 2.1%, the IBD 50 2.5% Friday, as the market reversed recent losses. Trading volume was below Thursday's levels. The bulls would have preferred heavier trade. For the week, the NASDAQ rose 0.29%. The S&P was up less than 0.1%. In spite of the sharp advance on Friday, new lows easily bettered new highs, and disturbingly for the bulls, the number of new lows in the market advanced significantly, while new highs only added 10 issues. Large capitalization stocks outperformed small, although small continue to outperform on a 10-day moving average basis. Outperformance by small caps is more consistent with a bull market. Advancing issues bettered decliners by less than 2-1 on the New York Stock Exchange. Again, not as solidly as the bulls would have preferred for such a large advance. In spite of the seeming conflict in our indicators, our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but should not be increasing margin on our positions. According to Investors Business Daily, the O'Neill timing model is indicating an uptrend under pressure. The distribution count on both the NASDAQ and the S&P 500 is very high, with 8 and 7 days respectively in the past month. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can indicate that the uptrend is in trouble. While both our model and the O'Neill model are technically on buy signals, our secondary indicators are showing signs of strain. The bull market may be getting tired. As always, keep your stops in place on all long positions and be sure to follow your written rule sets. If you'd like some help with your portfolio management or with your written rule sets, please feel free to contact me. My contact information is on the home page. Okay, let's take a quick look at our Spectrum Analyzer. What we're looking at here is HGSI, High Growth Stock Investors' universe of over 8,000 stocks, sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort. The reason we look at this is that by noting where the strength in the market is on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power in the market is and get out in front of it. So let's plug these stocks into our Spectrum Analyzer and see where the strength in the market is. On Friday, of the top 100 stocks in our sort, 15 were from the semiconductor semiconductor devices industry. 8 were from the airline industry, 6 from internet media, 5 from e-commerce. Rounding out the top 5, we have 4 from consumer finance and 4 from application software. Recently, we've been seeing a tremendous amount of semiconductor devices. We've been seeing consistent representation by the airline industry, internet media, and e-commerce. These may be good places to look for strength in this market. Let's take a look at the NASDAQ Composite. The NASDAQ Composite on Friday was up 104.74 points, or 2.1%. We closed at 5142. We closed very close to this resistance level in the 5164 area. And note, we recaptured this trend line support right here. The NASDAQ continues to squeeze between this resistance and this support. We'll keep an eye on which direction it breaks. If we break above this old high, we will most likely continue on to new all-time highs in the NASDAQ. If we were to break convincingly below this trend line, I would look for the market to fall down to this level of support down here in the 4,900 range. On Friday, trading volume was below the prior day, but was a little bit above average daily. For you followers of William O'Neill, the market is currently indicating an uptrend under pressure. We've been in an uptrend since October 2nd, but we have a tremendous amount of distribution. Right now we have 8 distribution days on the NASDAQ, but importantly, we have this cluster of distribution in recent days, and that's causing some concern in the market. Too much distribution in a short period of time can indicate that an uptrend is under pressure. Our market timing model right now is on a buy signal, which indicates that both aggressive and conservative traders can be adding to their portfolios at this point, but we shouldn't be increasing margin levels. Let's see what the S&P 500 is up to. On Friday, the S&P was up 42.07 points, or 2.1%. We closed at 2091. Trading volume was below the prior day, and the S&P is in an uptrend under pressure. Again, we have a tremendous amount of distribution in the past month, and we have these 3 days clustered recently. Right now, the S&P 500 is bracketed by support down here in the 2044 area and resistance up here in the 2134 range. On Friday, we recaptured our 200-day moving average, which is significant. We show that in black right here. And our market timing model is on a buy signal. Let's take a look at some stocks that we may be interested in watching. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, let's put together a little bit of a watch list for this week. Let's start today with LinkedIn Corp. LinkedIn provides a social networking platform enabling members to share their professional identity online via LinkedIn.com. LinkedIn's been working on this long cup with handle base. It's a first stage base. And we have a pivot point up here in the $258.39 range. LinkedIn gets a 72% checklist rating. And notice how the volume right here is drying up in the handle. That's exactly the type of activity that you want to see out of a cup and handle base. LinkedIn is worth a look here by conservative investors. Next, let's take a look at Palo Alto Networks. Palo Alto provides network security infrastructure products for enterprise service providers and government entities. Palo Alto's been working on this second stage base. We were able to buy some on a break above this trend line recently, and right now Palo Alto is setting up this pivot point in the $200.55 area, but this actually looks like a handle may be shaping up here, so we may be able to get into a little bit earlier entry. That handle needs to form for at least 5 days, but notice how the volume was pretty heavy on the right side of the base and seems to be drying up as we go into that handle area. Worth keeping an eye on. Palo Alto gets a 76% checklist rating, and for right now, as we said before, our pivot point is $200.55. By this time next week, we may be talking about this handle area, but for right now, we're looking at that $200.55 range. Next, we have Store Capital. We've been watching Store Capital develop this cup and handle base for a while now. Store is a real estate investment trust that owns 947 single-tenant commercial real estate properties in 46 states, operated under long-term net leases. And the nice thing about Store is it has a 4.7% dividend yield. Store Capital right now is in a first stage base. This is a cup and handle base, actually a very nice cup and handle base right here, with a pivot point of $23.13. Store gets a checklist rating of 72%. I don't know what this volume bar was all about, but typically in a handle, you want to see the volume dry up a little bit. Notice how as we built the handle, the left side of this handle, our volume dried up. That's the type of activity that you want to see. And then as we went into the right side of the handle, as the handle's coming back up here, volume began to pick up as well. With the exception of this one down bar, volume bar right here, this cup and handle's shaping up pretty much the way that we would want to see it. Store Capital can be bought by aggressive traders on a move through this $23.13 area on at least 140% of average daily volume. We mentioned earlier that airlines were showing up in our Spectrum Analyzer quite often recently. Virgin America is a low-cost airline offering premium service with scheduled air travel in the continental United States and Mexico. Stock has been working on this long cup with handle base with a pivot point in the 3861 area. The first stage base, and Virgin Air gets a 76% checklist rating. Notice how the volume began to dry up in the left side of the handle here, and as we've worked on the right side of the handle, volume's picked up just a little bit. Virgin Air can be bought by traders on a move above the 3861 area on at least 140% of average daily volume. Okay, for you folks that prefer your bases a little bit lower, we have Alibaba Group Holdings. Alibaba is a Hong Kong-based provider of online and mobile retail marketplaces. Alibaba has been working on this second stage square box base after this long downtrend. This downtrend goes back well over a year. We have a first stage base with a pivot point in the 8642 area. Alibaba gets a 64% checklist rating. This is not a stock that should be bought by conservative traders, but more aggressive traders can buy Alibaba on a move through that 8642 area on at least 140% of average daily volume. And the last stock I want to take a look at is Mobileye. On a fundamental basis, Mobileye is my favorite stock out there. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. They make collision avoidance systems and are going to be integral in the development of self-driving cars. Mobileye's been working on this second stage base for quite a while now, but we've developed this downtrend line. Aggressive traders can buy Mobileye on a break above this downtrend line. More conservative traders may want to wait for a break above the $52 area, or we break out of the base with a pivot point in the $64.48 range. Mobileye gets a 76% checklist rating and can be bought at these various points: the downtrend line, 52, or 64.48 on advances of above 140% of average daily volume. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.